included executing more than 32 transitions in a completely digital contactless manner. And in the process, we are very happy to have onboarded hundreds of new associates from many of our customer organizations across UK, Europe, and North America. So this quarter, the first quarter of financial year 21, has been a very satisfying quarter from an execution perspective. But the story of Q1 is not about SBWS and execution. The story about Q1 is about the amazing TCS family that has come together and stood shoulder to shoulder as one TCS and has defined our organizational response both internally and externally to this crisis. It's a story that is unimaginable in its scope and the impact that it has had, not just on us as an organization, but on our extended ecosystem of both our customers and the various other stakeholders that we touch every day. To take us through in a very brief way and to do justice to what has happened, I want to call upon Milind to share a few words before I go back to talking about the actual performance of this quarter. Milind, over to you.
Thank you, Rajesh. Thanks everybody for taking the time to be here. As mentioned earlier in our last quarterly briefing, in these challenging times, for us, associate health and well-being is paramount and has been a key factor for all our decision making. Over the last 3 months, we have not only connected with 400,000 associates on one-on-one basis, but we also connected with all of the 40,000 fresher recruits coming one-on-one and who will be joining us from mid-July through the year. To address, associate mental and physical health, it is, like I said, associate health and their well-being is paramount for us. And that has been a key priority, the key factor for all our decision making. So we have taken various steps, establishing a global medical hotline. We have a very large counseling services network even before COVID. We expanded that network quite a bit. Provided quarantine facilities across all major cities. To our associates, enabled repatriation, people coming back from various countries back to India. Establishing one TCS channel. Where we got motivational speakers to come and speak about various things to keep our motivation of our people high. The CEO and senior management town halls, so important in these situations where we have to continue to basically, the senior management comes and talks about the big picture all the time to our associates. Enabling social connects for fun, for various social activities so that people can connect outside of the work and providing a channel for that. And I think and such as talent hunt competitions, which is going on right now. So it is extremely important that we take care of this aspect of health and well-being, as a core aspect, core strategy for TCS in these challenging times. Everything we do has to be centered around this aspect of it, and everybody needs to understand. We have seen a number of people, obviously a lot of us have going through various situations, anxiety, frustration, loneliness, family issues, maybe you can name it, and there are challenges which are going on. And how does a company like TCS, who have been known for our values and culture, come and participate in a much bigger way to take care of our associates' health and well-being? I think very important things which we need to do, we continue to do, and we'll continue to enhance, change, and accelerate some of the things which we are doing here. Very critical. Second point I want to briefly mention is about talent development. Lifelong learning is a core value of TCS. How do we bring in basically that learning into our new operating model was our key priority this year. During this period, we further strengthen our state-of-the-art learning infrastructure, to do various things for our people. And as a result, our learning intensity has gone up almost by 24% in this quarter. We kind of stopped all junior recruitment in the last quarter, and all our fulfillment was done through strategic talent development. About 4,500 positions got fulfilled as a result. it was extremely important for us to connect with fresher recruits during this period, because they need to be reassured that yes, TCS is hiring and TCS will have given you an offer. You will come to the organization. They got delayed because of their academic term getting delayed, but they actually are coming in, and all of them will be joining us from now through the year. Innovative learning interventions, virtual hackathons, where 1,500 people participate every week. These kind of interventions and driving that intensity of learning during this period actually took also some mind away from things where it should not be, and it played a big role in also bringing people's morale up in terms of keeping them busy in the constructive things and not have them think about negative stuff. The third point I want to bring about, and it's much talked about topic lately, is about US President proclamation. This proclamation is unfortunate and unfair from our perspective. From a business perspective, in a short term, we will have some impact, but considering our strong supply and delivery ecosystem in the US, and with our customers adopting SBWS, location independent model of SBWS, I think we will actually be able to manage the situation in a short term. On a longer term, based on how the situation evolves, we anticipate challenges. From a sourcing perspective, as the fair share of students in the STEM discipline are international students. The treatment of international students and potential changes in the OPT regulation in the future will have implications not only on us but on the future of technology development in the US. I think more importantly, from an associate perspective, this is extremely unfair. It is important for all the stakeholders to understand that the proclamation is causing enormous amount of uncertainty and anxiety to our associates. Remember, these associates help run the major banks, the retailers, the manufacturing companies, the telcos, every day, thereby significantly contributing to US economy. We understand and empathize with our people. This is the situation we are in. We are all in it together. We understand and empathize with our people, and they know that will take care of them during this uncertain situation and beyond. Extremely important for all of us to understand that we are all in it together. There will be situations, there will be regulations, there will be different times. We'll have to deal with it. This is another thing which we will deal with it and move forward. The fourth point I want to quickly bring up, and it gets asked to me quite often, is what are your plans to returning to office? Currently, globally, 1% of our workforce is working from office or customer locations. During creation of across the facility, risk profiling, self-declaration, many mandatory trainings, and provided very safe transportation and quarantine arrangements. Incident response, standard operating procedures. When we detect a case inside the office, all of that has been done. We have also implemented our own state-of-the-art product for risk prediction of our people, for selecting people to come to work. All of these things are in place today. Having said all of that, we are still actually we want to be very conservative in bringing people to work. And our strategy varies, based on the COVID situation in each country, in each city, all of that. We expect, across the globe, we expect about 5% of our workforce coming to office by the end of this quarter. I think, this is how the situation will evolve. Our 25 by 25 model will also basically get established as part of this process. And we will actually, this is our alignment with the new normal. With that, over to you, Rajesh.
Thank you, Milind. And as I said, this is a quarter where the TCS family has truly gone over and beyond anything that could have been ever asked of them. And I want to thank each and every TCSer for having done what they've done and for continuing to do what they're doing to make the results that we're going to talk about possible. With that, let me turn to the results and the specifics of it. Could I have the highlight slide, please? Thank you. So we ended Q1 at 38,300 crores. which is a net reduction of 6.3% on a year-on-year basis, broadly in line with the expectations that we had going into the quarter and which we had shared with you at the end of last quarter. The impact of currency further accentuated this from a dollar perspective, but from a rupee perspective, we are actually happy that we have ended the quarter on a year-on-year basis, marginally positive, with a growth of 0.4% in reported INR terms. From an operating margin perspective, we have been able to deliver 9,048 crores of operating profit, which is an operating margin of 23.6%. And this has been a phenomenal effort by our entire operations, finance, and business folk, because this margin defense has come while we have stayed very, very supportive with our extended employee ecosystem, as well as with our customers who have been going through significant stress. By tight financial management of ancillary expenses and by a very focused approach to it, we have been able to minimize the significant impact that we have seen on the revenue line and defend the margin and keep it within a manageable range. From a net margin perspective, we have ended the quarter at 7,000 crores, slightly more than 7,000 crores, which is a net margin of 18.3%. From a cash from operations perspective, once again, disciplined execution and the focus that the organization has been able to build is coming through and shining through in this number. We have ended with one of our highest cash conversion ratios, with cash from operations at close to 9,300 crores. Once again, this has come despite a very supportive stance towards customers and also to all our partners and key providers who are an integral part of the overall TCS business model. Our payables, especially of our smallest vendors, has been 100%, and we have continued to maintain that and yet been able to deliver a significant outperformance on the cash side. We are ending the quarter with slightly more than 51,000 crores, and which keeps our overall capital return plan on track despite the significant impact that we're seeing due to this pandemic. From a customer perspective, we are ending the quarter with 4 more customers at 48 in terms of the highest 100 million plus revenue band. But the story on the customer side is beyond the numbers. This has been a quarter where our actual connect with our customers has increased significantly. Across multiple executive levels, our overall engagement has gone up by our estimates by almost 3 times. And we have been able to actually seamlessly switch over into this new operating environment and use that to an overall advantage of increasing both the volume and the quality of the customer dialogue that is happening, and which has been critical to ensure that we are aligning to the requirements of our customer and making sure that we are fully focused on the direction of recovery that we foresee and we are anticipating. From a segmental perspective, this quarter has been along the lines of what we expected. Verticals, especially life sciences, healthcare, pharmaceuticals, etc., they have continued to maintain the growth trajectory and are growing still at close to mid-teens numbers, going at about 13.8%. Most other verticals have been impacted in some way or the other by the overall economic impact of the pandemic. Our largest vertical, banking and financial services and insurance, has had a 4.9% year-on-year decline in revenue. Within that, insurance continues to do better, while capital markets and then followed by banking, which has seen a short-term impact, whereas we believe that it will recover during the course of the second half of this year. Retail, travel and hospitality, and CPG has been the industry that has seen the maximum impact due to the pandemic. The demand destruction in this vertical is significant, given the sheer economic impact that it has had across many retailers. Even within that, there is a full spectrum of both impact as well as recovery paths. And I'm glad to say that we have stood shoulder to shoulder with our customers and have been part of their recovery planning and recovery journeys. And we believe that we will continue to participate in that journey, both in its impact as well as in the recovery as it unfolds. From a geographical segment perspective, Europe, which had been on a significant growth trajectory, continues to maintain a growth momentum, albeit it has been impacted once again by the early impact of COVID. However, from a geography perspective, we see Europe as being most ahead on the recovery curve, and most of our customers in June are seeing good traction and good positive momentum, and we expect Europe to go back to its higher growth trajectory during the remaining course of the year. The United States has been among the most impacted, but also has been among the most resilient and adaptable in recovery and in planning for it. Overall, the sheer magnitude of the impact has been high, with year-on-year revenues reducing by 6.1% to 2.6 billion for the quarter. But as I said, it is one of the most innovative ecosystems, and there have been multiple instances of clients coming up with significant new innovations to deal with the pandemic, whether it be retailers coming up with curbside pickups and other such operational improvements, or our participation with areas like pharmaceuticals and medicines and delivery, which had to be, the supply chain networks had to be reconfigured almost dynamically to reprioritize where the medicines are required and the endpoints where the medicines need to be delivered, which were keeping on changing on an almost real-time basis. Similarly, supply chain changes to deal with the fact that a lot of air traffic had gone off the network, and making sure that critical medical equipment and deliveries are made available, to make sure that the significant support that governments were extending to to companies of all sizes were efficiently channelized to the banking and financial services channels, and to reconfigure their systems to be able to deal with that unexpected spurt. All of these are areas where we have seen significant activity and been participating very strongly. And we are quite positive and enthused by the extent of the innovative force that has been unleashed to deal with the pandemic across these markets. Then coming to UK, UK has been probably the most unfortunate in terms of having the twin impact of Brexit and COVID come together in this period, and that is showing through in our overall numbers. Our business in UK is down 8.5% on a year-on-year basis to 770 billion on a quarter. But I'm glad to report that in the market, we have outperformed everyone and have emerged as the second largest technology services provider in the UK market. Coming now to our overall innovation ecosystem, we are continued to make sure that our investments in our innovation ecosystem have continued. Our patent filings have gone up on a year-on-year basis to by 642 patents filed to 5,324 new patents filed. More importantly, this has gone up by 108 new filed patents in Q1. Similarly, our patents granted is now at 1,471. And I'm happy to say that in Q1, we have got 140 new patents granted. And our focus on research and innovation continues. Our conversion of that into intellectual assets that are of value to our customers also continues. Our Igneo product and our bank's products have both had significant wins, with Igneo getting more than 8 new customers and banks getting close to 10 new customers in this quarter. So this has been a quarter of significant movement on the, as I started with, but the most important aspect of it is the human element of it and the way TCSers have come together. we had spoken at the beginning of the quarter that looking at the uncertainty, we have frozen lateral hiring, but we will honor all outstanding hiring that we had issued. Milind spoke about the fact that we have been actively contacting all the 40,000 offers that we have made and engaging with them and preparing them to bring them on board during July onwards. We have also, looking forward into the demand environment, decided to selectively open up on the lateral hiring side and started onboarding new associates into the TCS ecosystem. So with that, I want to conclude the summary of this quarter as one where we have institutionalized our SBWS operating model, we have intensified our employee engagement, and we have significantly stepped up our overall interaction with our customers to ensure that we stay relevant to them and we continue to innovate with them in dealing with these unprecedented times. Thank you once again, and we'll now open the floor for questions.
Thank you, sir. We will now begin with the Q&A. In the interest of time and to give everyone a chance, request all of you to restrict yourselves to just 2 questions. Our first question is from Kritika Saxena from CNBC TV 18. Kritika, please unmute yourself and go ahead and ask your question.
Thank you, Arushi. Thank you so much, gentlemen, and hope you and your families are safe as well. Since, of course, in the interest of time and since we are talking virtually, I'm going to ask everyone my question individually, so just bear with me. Rajesh, last quarter you had said that by second half of the year, you're going to see a recovery. You've retained that. So can we then assume by Q3 a recovery is going to start? And is the worst of the COVID-19 pandemic then behind us with Q1? The other point I wanted to understand is from NGS. NGS, the deal wins have been quite significant at $6.9 billion. Help us understand where they are coming from and how sustainable is this deal win figure over a period of time, especially in the next 2 odd quarters when you are going to continue to see the ripple effect of COVID-19 pandemic. And I also wanted to get a little more sense and color from Rajesh, if possible, with respect to when you can expect BFSI and capital market also to see a recovery. And of course, I understand that retail, travel, hospitality have been badly hit and have seen the maximum impact. But, by Q3, Q4, is it realistic to expect an impact given the fact that most geographies have started relaxations? Milind, thank you very much for a very honest outlook with respect to H-1B visa and what the impact is going to be. You said it's going to be short term. Help us then understand what the impact on numbers would be as far as the short-term impact is, and is it just going to be 1 or 2 quarters? And finally, a quick question to Ramki as well. Ramki, as far as margins are concerned, can you give us a breakup of the exact impact of the COVID-19 pandemic, impact of currency, and also I believe there have been some efficiencies this quarter. Utilization, of course, you don't give out, but if you can give us an understanding of how the efficiencies have given a leg up to margins. Thank you.
Sure, Kritika. Let me start off. And so from a growth visibility and a growth trajectory perspective, the broad trajectory that we had laid out last quarter, I think we are still continuing to be on that. If you look at it from a vertical industry perspective, as I said, life sciences is continuing to be positive. BFSI, we believe, should start recovering starting from this quarter onwards. However, this is based on what we currently see, and we would like to wait for 1 or 2 quarters for it to stabilize. But we should see recovery in capital markets and parts of banking starting, especially European banking, starting from this quarter, and probably North American banking coming in by Q3. UK banking sector continues to be under pressure, and it is difficult to say when that will come in. Other industries like manufacturing, the Q3 or probably Q4 would be a more realistic sense of when manufacturing and the utilities would get back to where we dropped off from last quarter. The retail travel industry is a more complex one. We have broadly, we could break it into 3 parts. On one end is our exposure to airlines, travel, and hospitality, which the impact of it is likely to stay for quite some extended period of time, probably a year or more. Whereas the half of the remaining is what we call essential elements of retail, like groceries, and those are actually about a third of customers in our retail have had practically zero impact on a Q-on-Q basis and have been net positive. The remaining one third, we should see recovery towards later half of Q4 or Q1, which is essentially will go through a process of restructuring, and we will need to ride through that pain. But we believe that we should see recovery sometime in early next year. So overall, that's the color from an industry perspective. If you put it all together, when you think about the trajectory that we had laid out, we are quite confident that from rupee terms, we should be able to get back to the same year-on-year number by the time we get to Q3. So we'll be year-on-year flat in rupee terms by Q3 from where we see it today. On constant currency terms, we will come close to year-on-year flat by Q3. That's our current expectation. And by Q4, we should be able to get back to year-on-year flat on constant currency terms also. So that's the operating environment that we see. We have been asked this question in the past that you don't give guidance, and needs to be the reason we are sharing this is it's very difficult for our investors and other stakeholders to make an outside-in assessment of the company's performance, and therefore on a distinct basis we are sharing with you the operating model with which we are approaching it. Of course, this is subject to all the uncertainties that are around, but I believe that it is important for us to share that given the extent of volatility and the unprecedented company-specific situations that we are in. With that, let me turn it over to NGS and later Milind and Ramki to address the other questions.
Thank you, Rajesh. As you mentioned, the hallmark of this quarter is the institutionalizing of the secured borderless workspaces beyond the execution and delivery aspects. I'm quite pleased to see that the whole of TCS came together in embracing SBWS, and we have been able to prospect, sell, contract, onboard, and execute projects seamlessly using the SBWS model. The deal wins and the overall orders that we booked during this quarter has been quite satisfactory and phenomenal given the external situation, and it has been quite broad-based. The communication, media, and information sciences delivered one of the largest deals, and then we have won deals in manufacturing, we have won deals in financial services, insurance, and platforms have also scored its own wins. So it has been quite broad-based. Of course, retail and travel hospitality is one of the most impacted segment. And but barring that, and I think in all the other verticals, I'm pleased to see that manufacturing also turned around, in securing one or two large deals for us. So overall, it has been a satisfying quarter from a deal wins perspective, and we continue to see the pipeline growing and where we typically have at this time of the year. With this, over to you, Milind.
Thank you, NGS. Thanks, Kritika. I think short term means till end of Q4 is what we are looking at, and we are pretty, like I said, we would see some challenges because of this proclamation, but we should be able to manage that because of two reasons: because of our strong supply and delivery ecosystem in the US, and more importantly, the adoption of SBWS model by our customers. Location independent model, which is going to be the new way of working anyway for us. So both of these things together will surely take care of the short term. Over to you, Ramki.
Yeah. I think on the margins, let me, Rajesh gave the growth numbers on a revenue basis. He talked on a year-on-year basis of constant currency of 6.3% on a almost flat, or 0.4% on a positive on the reported terms. Let me also give you from a quarterly sequential basis, our constant currency decline was around 6.9%, but in reported terms, we closed with 4.1%. So when we have that level of contraction in a quarter, obviously there would be commensurate impact on the margins as well. So how have we addressed it? I think Rajesh talked about it. Let me give you a little bit more explanation around it. So as far as employee costs are concerned, our goal was to keep it at the same level rather than reducing it. So as we have stated earlier, and our model is not based on retrenchment or involuntary attrition to handle this crisis. So essentially what we have tried to do is to say that lateral, a freeze on general freeze on hiring. But of course, whatever offers were there, committed offers, we honored it. And in certain customer situations, as Rajesh talked about, we had people coming in. And second is we didn't go in with the compensation increases, which we normally do in the first quarter of every year. So it is with this, it is more to manage the inflation on the current base rather than to go and reduce it. And we believe that was the right thing to do in the circumstances. But on all other areas of cost, wherever discretionary spends were involved, we actually did a lot of management on that, and some amount of rationalization on the flex poolers or subcontractors. But overall, if you look at it from the actual revenue decline, which I talked about, almost 55% we were able to claw back in terms of many of these measures without the currency impact. So that is in summary how the revenue part of it has played out. The important thing is to factor in that when you have a revenue decline of this magnitude, you will have an impact on the margins almost to a commensurate level. And that, I think, has to be built into some of the models which people have been talking about. Thank you.
Thank you, sir. And thank you, Kritika. Our next question is from Chandra R. Shrikant from ET Now. Chandra, please unmute yourself and go ahead and ask your question.
Yeah, thank you very much for that. Rajesh, I just want to start by asking you about how pricing and vendor consolidation is working out. Is there a lot of pressure from clients with respect to renegotiation and also the deal pipeline? Because ISG's recent report said that global sourcing has come down, particularly a sharp decline in the financial services. So if you can tell us something about this, the pressure on pricing, is there going to be a lot of renegotiation as people come back? And also how you will benefit from vendor consolidation. Mrs. NGS, I just wanted to understand, in terms of the operating model now, only 1%, if I heard that right, employees are working from office. Can you tell us how this is going to work out this quarter? And Milind, final question to you. There have been reports in the last week about how a lot of IT companies have revised bench policies. They are sending employees on bench and then forcing them to resign. I just wanted to understand, have you revised your bench policies? How is utilization working out for you, since that is going to be a key lever for you to keep margins up? Thank you.
Thank you, Chandra. From a vendor consolidation perspective, there is definitely a flight to quality across our customer universe, and we are participating quite actively in that. It's more also about the fact that if you look at the nature of demand that is coming through, a lot of the demand initially in this quarter has come in terms of making sure that the digital infrastructure and the digital workplace is fully enabled and secured to allow customers to operate in this extended operating model. So that requires a very large and a full service capability, which is a limited capability that's available in the market. The large deals that we have announced, almost all of them have this common characteristic. They are all significantly about cloud migration, about rolling out digital workplaces, about rolling out new security environments, and making sure that that is actually deployed at scale and in a reliable manner. We have also had a significant interest from our customer universe in understanding the way we were able to rapidly roll into the SBWS environment. And quite frankly, it has been very openly shared with us that they found that our practices and our capabilities were far ahead of the larger competitive set, as well as with many of their own operations in distributed locations like India and other locations. So there is a lot of interest to look at operational excellence as a driver for consolidation, as also to look at completeness of service portfolio as a key driver for excellence. And I think we are at the early stages of this, and this will be a phase that will continue. And we are quite strongly participating in that. And that shows through in the deal pipeline that we have shared with you. Our total TCV this quarter is at $6.9 billion. And that's almost 20% up compared to the same period last year. And a lot of these deals have come from, so there is a spectrum of deals. The very large deals have increased, which is primarily on the digital infrastructure side. And a lot of the small deals and the numbers have also significantly increased, which is in terms of areas like reimagined customer experience and a lot of security-led activities that is happening, which has come in the smaller size. So overall, I think, as I said, there is a flight to safety, a flight to quality, and we are very well positioned to participate in that demand side. I'll hand it over to NGS to talk about the second part of the question.
Thank you, Chandra, for that question. As Rajesh mentioned, we have had significant increase in terms of client engagement during this quarter. And every time we get into a call with many of the CXOs, the key thing that they open it up with is that the secured borderless workspace model has been great, and thank you for that. And you guys have really took the lead in this. And amongst all our partners, you guys have delivered the best in terms of enabling work remotely without any impact to our operations. So which is a significant achievement for us. So our employees are happy, our customers are happy working remotely using the SBWS model. And our securities operations have also been significantly ramped up in the sense that it suddenly monitors pretty much 400,000 plus endpoint devices connecting remotely and then contributing to the delivery, innovation, and resilience of operations for our customers. Having said that, we have parallelly been looking at our development centers. All the 118 development centers and campuses that we have are now open. We have significantly altered the way that it will function, taking into account some regulation aspects, guidelines that we have received from authorities, prioritizing employee safety. So we have defined what we call as safe operating zones, by which maximum about 100 to 120 people will be operating in a safe operating zone whenever they come to office. And coupled with a number of initiatives, including contact tracing, the way that they will reach office, the way that they will interact with people, the way that they will move around, everything is being tracked, and we have put massive technology at play to ensure that people are able to come to office safely, go back to their home safely, and while they are in the campus, they are able to effectively contribute to the larger functioning of TCS overall. As Milind said, today we have about 1% of our employees working from our facilities, and we have published our 25 by 25 vision under the SBWS operating model, which envisages up to 25% of their time the employees will spend in the facilities, and at any point in time 25% of our workforce will be able to be in the office and contribute to 100% of being productive. I think we are on that journey, and given the circumstances, we have adopted pretty much a building specific or a campus specific approach to how we want to bring employees back to work. And we hope that during this quarter, this will slowly increase, taking into account the guidelines issued by the local authorities. And we hope to achieve about 5% of the workforce being inside our facilities, and each one of them spending 25% of their time at any point in time within our facilities. With that, over to you, Milind.
Yeah, hi. Thanks, NGS, and thanks, Chandra, for asking that question. I think we believe in creating, forward-looking people policies, and bench is just an outcome of a business performance. When you heard me, when I said earlier, our complete focus is how do I get this person to basically learn new things, being able to create, build a new capability, and help them deploy to a very exciting project as soon as possible. That has been our philosophy for many, many years, and that is not going to change during these times and in the future. So, bench is only an outcome of some certain business parameters which we need to manage, but the key aspect is managing and driving forward-looking people policies as we move through this journey.
Thank you, sir. Our next question is from Sajid from BloombergQuint. Sajid, please unmute yourself and go ahead and ask your question.
Good evening, gentlemen. Rajesh, my first question is that when we spoke in April, you spoke about the fact that you expect the chain 2 of COVID to break by December, and so you'll have a heading towards a normalcy in December and then a normal Q4. We are in July and we don't see that now it's breaking by September. So do you still hold by that outlook of yours? And you also mentioned that the impact would be something similar to a GFC crisis. Do you now think that the impact could be a little more worse than the GFC crisis on a whole year basis for TCS? And my second question is on the TCV. We've been clocking a good level of TCV every quarter, but we're not able to get a conversion of those TCVs into revenues. What preventing those conversions now, and what percentage of the TCV which you had last year and now which you got are going in for renegotiation because of this COVID crisis? One question for Ramki is on the margin protection. I know fall in revenue is where impacts the margins drastically. But what kind of protection do we have even as you go for the next few quarters on the margin? Because this quarter you saw 150 bips fall in margin on a quarter-to-quarter basis.
Sajid, you were breaking, but I think the gist of your question. As I said, our visibility into Q3 is better now than what it was when we first spoke about it in Q4. And I gave you a industry-wise color on where that recovery trajectory looks like. But in summary, we should be breaking at year-on-year positive in Q3 in INR terms, and getting close to it from constant currency terms, and probably breaking even on a year-on-year basis in constant currency by Q4. So if you compare that with GFC, it is again similar to what we had said, that the impact is steepest in Q1, and we should then see a recovery. If our current expectations play out, the recovery trajectory from here will be higher than or faster than the recovery trajectory that we had post the GFC. And that's primarily because the response to the crisis by various governments and institutions has been extremely coordinated and very large and very early, and that deployment has happened, and that should play out, and we should see the benefit of it coming. So this is the environment that we currently see, and we will keep updating it as we go through the rest of the year. From a pipeline perspective, I think the best way to think about the pipeline and understand it is in terms of market share gains. We have been steadily gaining market share in all the key markets that we operate in, and that is the true sense of what that pipeline is indicating, because that pipeline is about the incremental business out there and our greater relevance and our greater ability to satisfy the emerging needs of our customers. So overall, the pipeline trend is very, very positive. Both it shows demand for our services as well as it shows our competitiveness and our ability to engage with our customer set. I'm very happy with that. You wanted Ramki or sorry?
Yeah.
What was your second question? Who was it directed to?
No, I think one other question on between TCV and I think, and then also he had a question on margins.
Yeah, why don't you take the margin question, Ramki?
Yeah, so I think just as when there was a contraction, there is an impact on margins. We believe that with the growth recovery, there will be improvement in the margins as well. So you just heard Rajesh saying about how we expect it to come back by Q3 and Q4. So I think from a margin perspective, that improvement will also be in that line. Some of the discretionary spend, which we'll continue to exercise the whatever measures we have been trying to do, but some we will have to be released. But I think we'll have to bake all this into your estimation of how it will go forward. So the key is the recovery in the growth.
Thank you, sir. And thank you, Sajid. Our next question is from Harshada Sawant from CNBC Awaaz. Harshada, please unmute yourself and go ahead and ask your question.
Good evening, gentlemen. Nice to see you, albeit virtually. I have a question for you, Rajesh. You said the engagement with customers has gone up significantly in this quarter, but is that converting into larger spends from their side, or are they also renegotiating the pricing? Also, if you could, NGS, shed some light on the digital transformation, because that's where most of your clients have started spending more money. Is that going to be leading the overall revenue growth in the coming quarter?
Thank you, Harshada. As I said, the increased engagement is definitely converting into increased positioning and wins. I'll give you an example of major US Fortune 500 utility with whom we initially engaged because of their interest in what we have done on the SBWS side. They themselves had access to the same software that systems or the software capacity that they had, but it had not been deployed. And we were able to actually deploy that across 10,000 of their associates in a matter of a week. And when they saw the scale and the quality of that response, that triggered a larger extended discussion where our existing engagement with them has been significantly expanded through a consolidation exercise. And that's one of the large engagements that we have announced this quarter. So that's the nature of this conversation. It leads with specific issues. We have also hosted many industry forums. Our innovation forum, which we used to do across 4 or 5 key cities globally, we moved that entirely online. and we had 2,500 unique client participants in it, which is an all-time high for us. Similarly, for some of the most impacted industries like retail and travel and hospitality, we have hosted multiple forums where people have come together to discuss, not just with one-on-one with TCS, but into this kind of common forum where their various operational and strategic initiatives that they're taking to deal with it, and that resilience and the adaptability of it. And people value that the TCS relationship is giving them that access to that ecosystem and a trusted environment where they can actually learn from each other. And those kind of conversations, obviously, over time, lead to significantly increased engagements. And we are taking a long view of it. But the early success is a clear positive indication that this is something that will pay rich dividends over a period of time.
I'll take the next part of the question from Harshada. Great question. Thank you for asking that. As we explained in the last quarter, what we are seeing is customers who have adopted digital transformation and more specifically Business 4.0 framework and being purpose driven, they have been able to see more resiliency into their operations and being able to extend their capabilities very quickly. Having said that, when we meet our customers, what we are hearing from them is, given the economic lockdown that has happened, conserving cash and optimization of being efficient is foremost and important, followed by all the digital transformation which is ongoing. Some have deferred the digital transformations only to be quickly realizing that it's important, and they have recommenced it. But net, I think it's both the twin engines of efficiency, being optimized way of working, enabling remote operations, remotely supporting our customers, contactless experiences, as well as digital transformation. All of them are opportunities that we see and we come across with our client base.
Thank you, sir, and thank you, Harshada. Our next question is from Kushal Gupta from Z Business. Kushal, please unmute yourself and go ahead and ask your question.
Yeah, good evening, everyone. So, gentlemen, first of all, Mr. Gopinathan, I wanted to ask you about the deal pipeline. As you have been saying, it's been very strong. But what exactly is hindering the conversion? Because if I see the balance sheet in the asset side, I'm getting to see the unbilled revenue as on 31st March was 10,544 crore. But now it has reduced to 9,500 crores about. But can we see the further conversion going forward in terms of billings? Because last time in the Q4, it was because of loss of billings, we had seen that the revenue has declined. So going forward, can we see it improving? And secondly, my question would be to NGS on the cost control. We have, you have specifically mentioned that the cost control has been pretty good. But I mean, the margins, I was looking at for the last 3-4 quarters where we have seen 24 to 26% bracket for the margin, but now it has dropped to 23.6%. So how are we seeing it improving? I mean, what other measures can we see? Because I do understand that revenue has contributed in the decline, but how much has the rupee depreciation and travel cost helped in it?
Kaushal, you rightly pointed out that the unbilled revenue has gone down this quarter, but that is an indication of the strong financial conservative approach that Ramki has put in place and which we spoke about. We, as I said, both the revenue, the margin, and the cash performance has been despite a very supportive but a very conservative approach that we have taken to our overall financial management. So that's in fact something that we are quite proud of, and again an indicator of the quality of the business franchise that we enjoy and the quality of the relationships and the business that we have with our customers. The pipeline conversion, I already alluded to this or addressed this when I spoke about that it is directly linked to our increasing market share. And you see that across almost all the big markets that we are operating in. And in many of the analyst ratings of us, also in all the emerging areas where they see significant leadership from TCS. So TCV is an indication of new business and our relevance to our customers on an ongoing basis. Whereas revenue is a more complex setup based on both past as well as future business. But we are very happy with where we are, both in terms of conservative financial management as well as in terms of the relevance and the wins that we are having in the marketplace and that steady conversion of that. Over to you, NGS.
I think, Rajesh, you have answered most part of the questions, but more specifically on the deal pipeline as well as the orders that will be booked, those contracts have been in execution, and we have not come across a situation where these contracts are getting cancelled or getting renegotiated. They are in different stages of executions. They are some are growth and transformation led multi-year deals, some are long-term deals, but overall, the execution is on track, and barring one or two which will go through its own project delays sometimes because of various factors on the client side or our side, largely we are happy with the contracts and the execution therein across the globe and across various verticals.
Thank you, sir. And thank you, Kushal. Our next question is from Varun Sood from the Morning Context. Varun, please unmute yourself and go ahead and ask your question. Varun has joined us on audio only. Varun, are you able to hear us?
Hi.
While we wait for one to get...
Hi. Hi there. Hi, gentlemen. Can you hear me?
Yes, we can hear you. Please.
Yeah, thank you. Hi, Rajesh. My first question is that we get the sense that your optimism is primarily because of the recovery in Europe. Could you please help us clarify that from your current conversations? When do you really see a recovery in the US? Would it be in the Q3 or Q4, or has that been pushed back to say 21, 22 over to the next year? The second quick question I wanted to ask was, if I heard correctly, the management at the start, they expect about 5% of their workforce to return to office by the end of this fiscal. Could you again share that with only 5% of your workforce coming back to office and 95% still working from home, is this some kind of a margin driver in the long term for the company? And if yes, could you just help us explain how it will benefit the operating margin of the company, say over a 12 or a 24 month, with a lot of your workforce, 95% of your workforce working from home? Thank you.
Varun, let me address both of it. From a US perspective, it is a very vertical specific outlook that we have. As I said, we believe that if you think about the banking and financial services industry, which rightly took a very conservative approach to the crisis early on in the March-April timeframe, and you saw significant provision they made to take care of future losses. That impact of that provisioning should actually help increase the investable funds that they have for the remaining part of the year. And our conversations with our banking clients has been that they are well provided for, and they are now more than keen to actually engage in the technology transformation programs. This is across a wide spectrum. Cloud and cloud migration has been spoken about a lot, and there is even more willingness to experiment at scale with it in the US banking ecosystem, because today the current operating environment, and given the possibility that the situation might reoccur in the future, a cloud kind of an environment is a lot more resilient and reliable than a dedicated environment. So you're seeing a lot of traction on cloud. You're seeing a lot of traction on contactless customer engagement, and investing in significantly improving the quality of the customer interface, whether it be using something like video banking on private wealth kind of wealth management kind of products, or even more on the payment transformation, etc., that is currently ongoing. So the US BFSI space, we believe, will be the earliest recovery from a vertical industry perspective. Of course, life sciences and healthcare is, I'm not touching upon it because it has not gone negative, and it should be this thing. So those elements should recover. We are seeing significant innovation at play in the retail structure, but that will be the last to recover. If, in fact, travel will be the last to recover. Retail will be way out. Manufacturing is a bit of a mixed bag. It's difficult to immediately call out when that recovery should come. We think that by later part, that is Q4, we should see manufacturing come back on a year-on-year basis to a zero or a neutral number. But our optimism in manufacturing is actually driven more by market share gains in Europe than necessarily actually what is going on in the US. Though we think that US recovery is also a possibility by the second half of our fiscal. So it's a complex setup, and all of this is obviously caveated based on where we are. We are also concerned by the unpredictable nature of the way the pandemic is playing out, and any unexpected spikes there would obviously change all these equations, and we'll be back to the planning board. Let me also address the second question that you had. Our approach to plan at a 5% at office is entirely based on associate well-being and health and safety that Milind spoke about in the beginning. This does not give us cost benefit, because our entire infrastructure, like NG said, all our 120 locations are kept operationally ready. And we are actually significantly investing in maintaining this kind of a dual operating scenario, where our technology infrastructure is being upgraded to support the extended workforce, while entirely maintaining all our offices on a hot standby basis. So this is, in fact, investment that we're making, and we see the 25 by 25 vision as a long-term vision, which is more pivoted on what it does in terms of talent availability. Currently, our talent planning is based on a slightly, I would say, current generation approach of thinking about talent locally, whether it is in a given city, in a given country, etc. Whereas what we are doing is to put together a holistic management framework that will allow for true talent fungibility, and that will significantly change the nature of service delivery, and which is why NGS has been at pains to explain that this is not just about switching on a remote laptop. It is about changing the entire project management work distribution, work monitoring, associate engagement, the entire holistic framework with which we run the company, that is being switched to this new operating model. And the main benefit of it will come from talent fungibility. And that is what we are most excited about.
Excellent.
Arushi, we could have the next question, please.
Yeah. Our next question is from Anandi from the Economic Times. Anandi, please unmute yourself and go ahead and ask your question.
Yeah, hi. So my question was, given the nature of this quarter that has gone by, have the requests for deferred payments by clients increased? Number one. Another question is, so you mentioned that you have onboarded new associates across customer organizations. Could you give us some color on this? Is this across US companies? And also another question for Milind sir is, so the headcount has decreased from last quarter about 4,788 or so. If we could get some color on that. Thank you.
Yeah, Nandi, I'm sorry, I lost the first part of your question. What was it?
So the first part was basically on deferred payments by clients, request for deferred.
Right, yes, absolutely. Obviously, as you can imagine, given the extent of impact in some of the verticals, there has been a lot of requests for support, and we have taken a very pragmatic view to it. Many of these are long-standing customer relationships, and wherever these kind of discussions are within the larger context of planning for and keeping it within a strategic engagement framework and thinking about a recovery path, we have been supportive and on a selective basis participated. In fact, there was an earlier question on pricing also. There are also similar stance. So whether it is pricing, whether it is payment terms, we have been very supportive and on our long-standing engagements and taken a long view of it. And the numbers that you see are net of all of that. So that's, I believe, in keeping with our tradition of investing in both our employee relationships as well as our customer relationships. And we are very pragmatic about the situation that we are in. Your second question was about?
You mentioned that...
Milind, could you address the headcount question, please? Or let me take the early part of it. We had mentioned about onboarding on some of the big transformation engagements that we had announced in the past. Like NGS said, they are executing, and as part of that, we are bringing on board associates into our ecosystem across multiple geographies. It's happening in Europe, it is happening in UK, it is happening in US. And we are very happy that we were able to execute on those plans even in a full remote contactless manner. So we have done large town halls where we have inducted more than a couple of hundred associates, and our acceptance rates have been very high. Employee satisfaction on our newly onboarded associates has also been very high. So it has been a truly amazing with the speed and agility with which our entire operations and HR team has actually turned around and ensured that none of the large engagements that we were in, none of them have suffered as due to this unprecedented operating situation that we are in. I also want to call out on this, the TCS finance team, which has also ensured that our internal financial operations has not skipped a beat. We have hit every date that we had actually put on place much before the pandemic had happened, and made sure that the quality of financial management and the quality of reporting is timely and of the same high standard. So it is a full court reaction, and it is showing through in every aspect of the way we are running our business.
Thank you, sir, and thank you, Anandi. We have one last question from Swati Murthy from Money Control. Swati, please unmute yourself and go ahead.
Hi, Rajesh and everyone else. I have just a couple of questions. One is about, I think, the decline in headcount, which Anandi had asked. I would like that answered as well. And one more is on the, Rajesh had mentioned about the selective hiring. Could you please elaborate on where this hiring is happening and also more color on how is the onboarding of freshers happening? I think it started from July, 4,500, if I'm not wrong. And I would also like to know about the offshorings. Do you see more offshoring happening with concerns over visa? So do you see more offshoring happening because of COVID? That's it from my side. Thank you.
Milind, could you answer, please?
Yeah. So I think purely from a reduction standpoint, it's a regular voluntary attrition which we have. And through our operational excellence, we have just, like Rajesh and NGS said earlier, we have not added people. We actually basically fulfilled all through our talent development. So the net result is a negative number, and that is a plain and simple answer for net reduction of that. With respect to offshoring, yes, we would like to do that, but in the current situation of COVID, it is difficult. It is challenging to get people back on travel. From a travel perspective, from a international travel perspective, and everything else around it. So yes, that has been our constant effort to improve offshoring, and we will continue to do that on that.
Rajesh.
Swati, we'll take your questions offline. Okay, this was the last question for this evening. We will take the rest of the questions offline. And with that, we come to the end of our press conference. Thank you everyone for joining us today. Please stay safe, take care, and have a good evening. See you next quarter.